The Chilean pharmaceutical group that's bidding for Adcock Ingram, CFR, has questioned the motives behind the counteroffer that was launched on Monday morning by Bidvest, saying the offer was good for Joffe, but made no sense for Adcock or indeed for South Africa. Daniel Salvadori, Executive President, Specialty Pharma at CFR Pharmaceuticals, joined us earlier this morning. Here's that interview.
We think that our offer is really compelling for South Africa. We've heard a lot about, foreign ownership, for instance, but we think foreign ownership in this case is really the solution for Adcock Ingram and is very positive for South Africa. If you look at what are the three key issues in the performance of Adcock Ingram, they have suboptimal utilization of their plant, they have an issue with their pipeline, which is key to be successful in pharmaceutical, and they're very exposed to one big market and obviously the volatility of the rand, and we fix all of that. First of all, we open Adcock Ingram to many new markets. We're present in more than 15 markets in Southeast Asia, in Latin America. That's number one. Number two, we bring product to be produced here in South Africa. That creates employment. Number three, if you produce product here and then we export it back, plus we sell the Adcock portfolio in Latin America, we create export in US dollar. And by doing these three things, I think we just don't only solve the issue for Adcock Ingram, but we do things that are good for South Africa. Why?
I got it. I mean, I think everybody gets that, and it's a compelling case and a compelling argument. But the real world works differently. The real world works in a situation, you come into a country where one of the heroes of the business environment, who has a company 4 times your size, made the initial bid. Surely you didn't think Joffe was going to lie down.
Well, it's very difficult to fix Adcock Ingram if you don't have the synergies, right? And the synergies are really the key for this deal. You need to fill up the plants. You need to bring pipeline. In pharmaceutical, 10, 20 years ago, there used to be 10, 20 different competitors. Look at the world of today. There's been a huge consolidation. So if you don't have multinational scale, if you don't have a complete pipeline, if you don't run at optimal capacity, you will not fix the asset. You will cut jobs, which is not good for South Africa. We want to create jobs, not just in manufacturing, but also in R&D. So, yeah, for us, the rationale of the deal is so compelling that we didn't expect such hostility. But, Joffe's offer is not a comparable offer in our view, because we have made an offer for 100% of the company. He has made an offer for 30% of the company. He said his offer is superior. Well, mathematics is a science, not an opinion. So, our offer is a 73.50 and a see-through value 75.76.
Is that at the current share price of CFR?
Yeah.
119.
Yeah.
Because it was 140 in October. So your own shareholders are saying, "Whoa, we're not so sure this is a great idea."
Our shareholders are extremely supportive. In fact,
why has the share price fallen then?
Well, there is not really, much that you can say of it. There is a lot of volatility because the stock is not so liquid today. But the shareholders are extremely supportive. And in fact, if you see the shareholder response that we have got, it's extremely positive. Now, if you look,
but then you would expect the share price to have gone up since October instead of going down.
The share price actually went up when we announced the deal. It was a very positive reaction. And it's always, actually, when you announce a deal in pharmaceutical, usually your share prices go down. The share price of the acquirer go down. But we got a very different reaction. Our shareholders are enthusiastic. The share price has held. We get very positive feedback. Our offer is 75 plus synergies, which is 6 rand per share, versus 70. And for 100% of the company.
Daniel, the share price hasn't held. It's gone from 140 to 120. In fact, yesterday was 119. That's not holding. That's going down. That's sliding. But let's get into the real nub of what's going on here. Joffe is now, he'll vote about 6% on the shares he's currently got. The PRC will vote 19%. That's 25%. You need either Joffe or the PRC. Now, clearly you're not getting Joffe. Are you comfortable that the PRC is on your side?
Well, look, all shareholders are important, but clearly the PIC is the kingmaker. Now, the PIC hold $16 billion in Bidvest and less than $2 billion in Adcock Ingram, so they hold 8 times more. But we are confident in their integrity. We are confident they'll do the right thing for all of Adcock Ingram shareholders. And we continue to engage with them, and we want to convince them, and we believe we can convince them that foreign ownership is positive for South Africa. It will create jobs. It will create a $600 million foreign direct investment. It will create a US dollar denominated export. And it will create a sustainable local pharmaceutical industry, which you cannot create if you don't fill up the plant, if you don't bring product, if you don't create an R&D hub, which is what we want to do. So jobs, foreign direct investment, US denominated export. We believe this is a very good proposition, and foreign ownership is good.
So you're sticking with the business case, as it were. This is what is good for Adcock Ingram. Joffe is saying...
And for South Africa.
And for South Africa. Joffe is saying Aspen Pharmacare has shown that it, since 1997, the founding, can be an even bigger company than CFR. Why not give him a chance to do the same thing with Adcock Ingram, which has been now around nearly 100 years?
Well, I'm glad Mr. Joffe brings that up, because if you look at what Aspen has done, Aspen has opened up multiple markets. It takes a long time, a lot of expertise, and a lot of money to do that. And when you started doing it 10 years ago, the world was a different place, because there were much more companies, it was much more fragmented. Today, if you were to come into Latin America, to build up the infrastructure would be, I'm not going to say impossible, but very, very hard. And it would take probably 5-10 years and a lot of money to be invested in order to achieve that market penetration. But we give that to the shareholders from day one. And that is why the synergies, and I know Mr. Joffe said we have $400 million in revenue, but that's not right. It's $400 million in net present value of incremental cash flow. And that's an important distinction. That's another R6 per share.
Slow. Just unpack that, because that was really the nub of his argument. He said you'd claimed 400 million in synergies, dollars that is. He said that CFR was going to get the major benefit of it, but you hadn't said over what time. Was it revenue? Was it profits? Nice and slowly unpack
Sure,
it.
absolutely. So it's $400 million in net present value of incremental cash flow from revenue that would come from synergies. And when we speak about synergy, we recently did, a year ago, a deal where we acquired the #1 company in Colombia. We promised to the market $200 million in synergies. Less than a year later, 80% of those synergies have already been delivered, which is why our shareholders are supportive of this deal. How did we deliver those synergies? Doing the same thing that we are promising shareholders to do now. We take the portfolio of CFR, register it in Colombia. We take the portfolio of the Colombian company, register in the rest of the CFR countries. And here we're saying we're going to do the same. We're going to take Adcock portfolio, register, not all of it, but a selected group of product into Latin America. We're taking our portfolio, registering here. We're transferring product to be manufactured here like we did to Colombia. We transfer product into the Colombian facility. So if you look at how are we going to achieve those $400 million in net present value, which I want to stress again, Alec, it's an extra R6 per share. So that would get the offer above 80 Rand in terms of total value. Those things that we said we're going to do, they are things that we have already done.
So you got the model. You're a smart guy. You went to Harvard. You got an MBA from Harvard. You joined CFR about a year ago, just over a year ago. Were you the man who drove this idea? Did you come to South Africa initially when Adcock said, we'll show you under our drawers? Well,
I think this was a group and a team effort, obviously led by Alejandro Weinstein. We did take a look back in October of 2012 to the world of existing asset up available. And Adcock Ingram obviously made the screen. At the time, the company was not for sale. But when we look at the world, we look at what we're trying to create, we look at the opportunity in pharmaceutical, it was clear to us that if you want to be a global leader in emerging market, you have to be a player in the Southern Hemisphere. And to be a player in the Southern Hemisphere, you cannot skip Africa. We had a presence in Southeast Asia, we're strong present in Latin America, we want to be a player in Africa. And then 3-4 months later, Adcock Ingram came to play. So obviously it was already up in our radar screen. Obviously then I made a trip with Mr. Weinstein, and we've been leading the work since then.
But when you joined CFR, was that specifically?
No, I didn't join to
not for Adcock, but was that specifically to globalize the company more?
Absolutely, to help Mr. Weinstein.
And are you based in Miami? Is that correct?
I'm actually based on planes. I travel a lot, but in theory I'm based in Miami, yes.
So you came into South Africa, you saw that somebody had made a bid already, and yet you didn't go and talk to him.
Well, there is a process that was started. This was public company M&A. There is a process that was started by Deutsche Bank. And in that process, all bidders were given a chance to look at the company. And obviously, there was a timeline. You had to look at the diligence at the data room, do your diligence, visit the site, do your work, and submit an offer. So we just stuck with the timeline, with the process, as it was coordinated. That's the way you do it, in public.
But if you do your homework, this is a highly politicized country, extremely so. Surely you would need to take those kind of issues into account.
Which is why, for instance,
Why are you surprised? Yeah.
you know, why, for instance, we have retained black empowerment ownership. And you know, we're committed to potentially increase that stake in the future, which is why we have engaged with the government. And the government has shown, you know, very great support for our deal on the merit that I've explained before of the synergy. Why can we fix the issue? Why is it good for South Africa? Which is why we have engaged and will continue engaging with the PIC.
Anna Mokogong, who's Brian Joffe's partner, is abroad at the moment, so she wasn't able to come onto our program. But I have been engaging with her, and she said, but we are by far the biggest black-owned pharma company in the country. 3 plants, manufacturing plants that we operate. Why did you not talk to her?
Well, because, again, as I said before, the key for success, if you want to fix Adcock Ingram, is creating pipeline, is filling up the manufacturing plant, is exporting and opening up to new market. Those 3 things we can bring to the table.
Mm-hmm.
And you know, we believe we have a compelling proposition.
But why didn't you talk to... If you go into a foreign country, first of all, it's very hard. They speak a different language. Not to you, but certainly for Alejandro, you can see that. Secondly, it is the different things that happen in a country like this. Highly politicized, BEE is a big issue. Did you do your homework? That's really the big question.
I think we did, Alec. I think we have a good value proposition on the table. As I said before, it's a superior offer. It's for 100% of the company. It has synergies. And you know, it will bring very positive element. Foreign investment is good for South Africa. Foreign ownership is good for South Africa and for Adcock Ingram.
You mentioned BEE, and I'd just like to clear something up here. The BEE shareholders, existing shareholders, do they have a put that they can sell their shares to you after the deal's concluded?
Some shareholders express preference for some increased liquidity upon the completion of the deal. So we've heard that. And you know, we have created a structure that enables some of them to get some increased liquidity. However, I think what really matters is, number one, we are committed to preserving the current ownership and increasing it over time.
So they want increased liquidity in their cash, in their bank balances. They want to cash in some of their shares as well.
They want to have an option to have partial liquidity. We have accommodated that. But the key thing that I think matters is that as a consequence of that, the ownership, the black empowerment ownership will not change, will not go down. Eventually, over time, we're committed to increase it.
And what about you? Are you going to stay based in Miami, or would you come here?
No, I will be based in Miami, helping with the Latin American business. I think Mr. Wanshan has said that, you know, he envisioned running Africa as a separate, you know, essentially region and BU. So Latin America will be one region, Africa will be one region, Southeast Asia will be another. And I think this is an important point, if you allow me. We're not the kind of multinational that will come here, take off the Adcock Ingram logo, put our logo on, change the email addresses, and impose its culture. You know, you may note, if you go on our website, we don't have a head of HR. And that is by choice. Because we don't feel that someone sitting in Miami or in Chile should impose HR policy. We respect the local realities. We empower the local realities. We want to preserve the Adcock legacy. We want to bring synergies. We want to bring jobs. And we want to grow Adcock.
But what about management? This is a company that relisted in 2008. Mm-hmm. The profits at the moment are lower than they were before they relisted. Right. Clearly management has failed. That's why you guys are interested. Are you going to keep them?
Management will have a new strategy, will have a new infrastructure, and will have a chance. And everyone deserves a chance in life. Okay. Yet, I want to be very clear. South Africa will be our #1 market, 40% of combined company revenue. We will get it, we have to get it right? We cannot fail to deliver the synergies. So we will make sure that the $400 million net present value will be delivered to shareholders in due time, and that we will work relentlessly to achieve what we promised.
Well, the manager is going to be very wealthy, so if they don't stay on, it doesn't really matter to them, given the incentivization that they've had from the current board. Just to close off with how would you rate your chances of success? You know, you've seen the cards on the table. For some of us outside, we say, well, if the PRC votes with you, you're home free. If the PRC goes against you, you've got no chance.
Look, Alec, the reality is the PIC is the kingmaker. Mm-hmm. As a matter of fact, right after this interview, we're going to Pretoria to see them again. We trust their integrity. We trust they'll do the right thing. I don't know if that means abstaining or voting, given they have ownership in both Adcock and Bidvest, but we trust they'll do the right thing, and we trust we can convince them that foreign ownership is good and is the solution for Adcock Ingram.